Howdy, folks. Welcome back to the Liberty Call. It's Tuesday, May 10th, 2022. You're probably wondering why I'm wearing a cover of a sailor. Today is the 25th anniversary of my last day in the Navy. Woo! So I probably wasn't wearing this one. This one's pretty clean. But I was probably wearing this cap my last day, squadron ball cap. Go Gladiators. So anyways, hope everybody's having a wonderful Tuesday out there. This is my 25th anniversary of freedom from the federal government, which does their best to screw everybody over. But I always tell people, the Navy was the best and worst job I ever had. Being a sailor was awesome. If you could just, work hard, drink a lot of beer, chase a lot of tail, whatever you want to call it. But working for the federal government sucks. You got all these, low IQ idiots who are in the senior ranks, and most of them are just yes men and women. Sorry, I don't want to discriminate against the fairer sex, but yeah, it's a mess. And my younger boy's dealing with it right now. So he's got 2.5 more years left on his ride. So told him not to go nuke. It's an 8-year tour. Sorry, buddy. Anyways, all right. Well, a crazy day maybe not crazy, but pretty wild day in the markets. Things were all over the place today for most of the indexes. So let's take a quick peek at that. Bring up my stock chart here. This is today's market for the Dow Jones. You can see we opened up. We were up about 450 points at the open, and got as low as down about 341 points. And we finished the day down about 85 on the Dow. Same chart for the S&P 500. Looks very, very similar. NASDAQ, they opened up, let's see, about what? More than 2.5% up. Barely got into the red for a short stretch, and then finished the day off pretty positive. So, but yeah, not the best day. I think a lot of people are freaking out trying to figure out where the market's going to find some footing. But guys, be careful out there. It is very, very volatile. So if you need some help, I know a guy. I could probably steer you in the right direction. All right, let's go ahead and see how today's indexes did. The Dow Jones finished down 0.26% at 32,160. The S&P 500 up 0.25%, closed at 4,001. The NASDAQ finished up almost 1%, up 0.98 at 11,737. Small caps were down slightly, down 0.19. The VIX receded today 5.06%. It's currently sitting at 32.99. Moving over to the other exchanges here in the Americas, Canada was down 0.55, Brazil down 0.13. Mexico was flat, finished up 0.06. Looks like the European markets had a much better day than yesterday. Germany was up 1.15. The UK was up 0.37. France up 0.5%. Euro stocks up 0.79. Netherlands up 0.54. Spain looks like it was flat for the day. Italy up 1.04. Switzerland up 0.85. Portugal up 1.12, Belgium up 0.46, Austria up 0.66, Sweden up 1.5, and Denmark up 0.78. Looks like the Russian exchanges were closed today. Moving further down, Poland was down 0.47, Hungary down 2.16, Turkey up 0.99, Israel up 0.91, Saudi Arabia down 2.21%. Heading over into the Asian markets, Japan was down 0.58, Australia down 0.98, New Zealand down 0.25. Chinese markets fared a little bit better. The Shanghai was up 1.06, the SESE component up 1.37, China A50 up 0.8, the DJ Shanghai up 1.24. The Hang Seng did fall. It was down 1.84. And the Taiwan weighted was flat at up 0.08. So for most of the day, things were pretty good. The Asian markets and the European markets were mostly green, mixed here in the U.S. some down, some up. But again, don't let one day be the be the be all end all. I certainly see that as long as this downtrend continues, don't get excited about any dead cat bounces. So, all right, well, let's check out today's market recap. S&P 500 advances as dip buyers return to tech. Shrink the text down. The S&P 500 climbed Tuesday, led by a rebound in tech as investors looked ahead to an inflation report due Wednesday, expected to show slowing price pressures. Tech rallied as dip buying action returned, underpinned by a fall in treasury yields. Microsoft and Alphabet led gains in big tech, both rising more than 1%. Facebook and Amazon and Apple were above the flat line. The 10-year treasury yield fell below 3%, a day ahead of a fresh U.S. inflation data expected to show slowing price pressures that could bolster investor sentiment. Stocks. Quote, investors are looking for signs of a potential, quote, peak in the inflationary pressures we have encountered over the last several months. And if they get a hint of anything close, the markets could set the stage for a strong rally in our view. Janney Montgomery Scott said in a note. Peloton Interactive, meanwhile, cut some losses to trade 6% lower as the connected equipment fitness company delivered guidance that fell short of estimates after reporting a wider loss than expected in the third quarter. The stock had been down more than 20% intraday. Quote, our Q4 outlook reflects softer demand versus our February forecast, Peloton said, adding that its subscription price hike had led to an increase in cancellations, but the impact was expected to be, quote, modest. AMC Entertainment fell more than 3% lower after the movie chain operator reported quarterly results that beat both the top and bottom lines as box office hits, including The Batman, spurred a return to big screen for moviegoers. Healthcare stocks were boosted by a 4% jump in Biogen after the drug maker made further progress towards the potential approval of its proposed Alzheimer's disease drug, lecanemab. BioEngine and Eisai submitted a rolling drug biologics license application for lecanemab that could, depending on the outcome of an ongoing confirmatory late-stage clinical study, paved the way for the companies to apply for full approval of the drug later this year. Novavax cut losses to trade more than 1% higher despite reporting quarterly results that fell short of Wall Street estimates. Energy stocks shrugged off a decline in oil prices as intensifying lockdown measures in Shanghai continue to stoke fears about demand. Quote, the strict zero-COVID strategy in China is putting the brakes on oil demand there, in quote, Commerce Bank said in a note. Right. So some good, some bad, just a typical day in the markets. All right. Next article here having to do with oil. Recession fear drives U.S. oil below $100. Inventory data awaited. For the second time in a fortnight, U.S. Ooh, that's a big word, fortnight. Somebody had their thesaurus out today. U.S. crude prices broke below the $100 per barrel support, even ending under that mark on Tuesday. And once again, oil bulls will likely be counting on weekly U.S. inventory data to restore the market's upside. Brent crude, the London traded global benchmark for oil, settled down $3.48 or 3.3% at $102.46 a barrel after an intraday low of 101.73. After a 6% rally in two previous weeks on speculation that Europe was nearing a much-awaited ban on Russian oil, Brent had given back 9% week to date on worries that the United States might fall into recession from aggressive rate hikes by the Federal Reserve to beat inflation growing at its fastest pace of 40 years. But it was U.S. crude that was on the radar of oil bears. New York traded West Texas Intermediate, or WTI, the benchmark for U.S. crude, settled Tuesday's trade down $3.33 or 3.2% at $99.76. WTI hit a session low of 98.91 earlier, its lowest since 97.06, bottom of April 26th. The U.S. crude market gained almost 8% in two previous weeks of trade to concede almost 10% within the first 2 days of this week. Quote, there's clearly a huge amount of worry about recession in the markets at the minute as central banks continue to aggressively tighten against the backdrop of the slowing economy and cost of living crisis, end quote, said Craig Erlim, analyst at online trading platform Owanda. Quote, there's a lot of pressure on household budgets, and it's only going to intensify as the year progresses, which will take its toll, end quote. Even so, the unwillingness of global exports alliance OPEC Plus to turn on the taps on more is keeping oil prices, quote, very elevated, but a little over $100, end quote. He noted, adding that it was, quote, perhaps a sign that we should get used to these higher prices, end quote. Well, I mean, I don't know. Why would we expect the OPEC company or countries to be, helpful to us in this situation? We dug this hole. We got to live with it, and removing the price or making adjustments to the oil supply, or demanding that they pump more oil out of the ground. Why should they? They're making a boatload of money off this. All right. Next article here has to do with the Fed. Mester, we talked about her last week. She's one of those career, people with the Fed or the Federal Reserve System. MBS or mortgage-backed security sales could mean market losses for the Fed. If the Federal Reserve sells any of its holdings of mortgage-backed securities, it may have to do so at a loss. Cleveland Federal Reserve Bank President Loretta Mester said Tuesday, a potentially difficult problem for the central bank, at least politically, since it remits its annual profits to the U.S. Treasury. Quote, a potential drawback of sales is that depending on the interest rate path, they could result in realized market-to-market losses, end quote, Mester said in comments to the Atlanta Fed conference. Quote, such losses would not entail any operating challenges for the Fed in setting monetary policy. However, they would pose communication challenges that would need to be appropriately addressed, end quote. So it would look bad that the Fed bought toxic assets and then took a loss on it. Quote, next paragraph here. The Fed has faced persistent questions from some members of Congress on the risks it was taking in amassing its giant stockpile of bonds and mortgage securities. The assets were purchased to stabilize key financial markets during the onset of the pandemic in 2020, but part of the Fed's current fight against inflation involves lowering its presence in those same markets. Assets that are held to maturity pose no risk of loss, but sales would depend on market prices and interest rates of the day. An ICE index of mortgage-backed securities is down by 9% on the year. Mester's comments do not reflect the likelihood of sales, but Fed officials do want their balance sheet to consist mainly of Treasury securities and to get rid of most, if not all, of the $2.7 trillion in mortgage securities the central bank currently holds. Fed officials plan to begin reducing their nearly $9 trillion balance sheet next month by initially by taking the proceeds of maturing Treasury securities or repaid mortgage securities, and instead of reinvesting the proceeds, pulling that much cash out of the financial system. By this fall, the reductions will be as much as $60 billion per month for the Treasury securities, a limit the Fed expects to meet each month, and as much as $30 billion in mortgage securities. Because of the slower repayments expected on home mortgages, the Fed does not expect to meet that cap each month and has mentioned possible active sales of MBS to reach it. The sales of MBSs would, quote, speed the return or our portfolio's composition to mostly Treasury issued securities. Because home mortgage interest rates have been rising, the sale price of those mortgage securities may have fallen since buyers would demand a discount to accept mortgages based on a smaller stream of payments. That, quote, would lower the Fed's remittances to the Treasury, end quote, Mester said. She said that it's determining how far the balance sheet would shrink the Fed, as it did in a similar exercise from 2017 to 2019, will, quote, be monitoring developments in money markets to determine the appropriate level, end quote. Well, maybe you shouldn't buy up toxic assets off the market just to save your buddies on Wall Street from taking massive losses. It's not the taxpayer's job to bail out all your friends. But hey, what do I know? All right, last article here has to do with inflation. That is the topic du jour right now on most of the financial pages. Why are food prices going up? I don't know. It's a mystery. Key questions answered. Why are food prices rising? Global food prices started to rise in mid 2020 when businesses shut down due to COVID-19 pandemic. Straining supply chains, farmers dumped out milk and let fruits and vegetables rot due to lack of available truckers to transport goods to supermarkets, where prices spiked as consumers stockpile food. A shortage of migrant labor as lockdowns restricted movement impacted crops worldwide. Since then, there have been problems with key crops in many parts of the world. Brazil, the world's top soybean exporter, suffered from severe drought in 2021. China's wheat crop has been among the worst ever this year. Concerns about food security, heightened during the pandemic, have led some countries to hoard staples to ward off future shortages, limiting supplies on the global market. What food prices are rising most? Throughout the pandemic, high vegetable oil prices have helped drive up broader food costs. Cereal prices also hit a record in March as a result of limited shipments of corn and wheat during the Ukraine war. Dairy and meat prices reached a record in April, according to the UN Food Agency, reflecting continually increasing global demand for protein and high prices for animal feed, mainly corn and soybeans. In addition, bird flu in Europe and North America impacted egg and poultry prices. In U.S. inflation data for March, the index for meats, poultry, fish, and eggs increased 14% from a year ago, while beef rose 16%. When will food prices come down? That's hard to say. It's hard to say, given the agriculture production depends on hard to predict factors like weather. UN Secretary General Antonio Guterres said in early May, the problem of global food security could not be solved without restoring Ukrainian agricultural production and Russian food and fertilizer output to the world market. World Bank forecasts wheat prices could rise more than 40% in 2022. The bank expects agricultural prices to fall in 2023 versus 2022, but that depends on increased crop supplies from Argentina, Brazil, and the United States. By no means a guarantee. The sharp rise in fertilizer prices as countries avoid buying from major producers, Russia and its ally Belarus, could discourage farmers from applying adequate crop nutrients to their fields. That could bring down yields and result in lower production, prolonging the crisis as climate warms. Yeah, because that's a real problem. Extreme weather is becoming more common, posing another risk to crop production. Who's most affected? I'm not going to read through all this. Who's most affected by this? The little person. They're the ones who are, going to the grocery store and having to buy less. And in the end, the wealthy people who run governments, run companies, they're going to be fine. I mean, unless the people get pissed off enough and storm Washington and walk out with their, those politicians' heads on pikes. I wouldn't be upset about that. But anyways, and I mean, with inflation and everything, I mean, the main problem we have here, close this, is that, when you increase the money supply by 40%, that just means everyone's got twice as much money, or not. They have as much money as they had before, or a third more money than they had before. And you have the same or less goods to buy. So when you have more money chasing the same or less goods, the price of those goods is going to go up because everybody's got more money to spend. I mean, again, basic economics. But, again, the folks at the Fed and the Treasury, maybe they got like a concussion or something. Maybe they didn't understand that this was going to happen 2 years ago when they created so much in dollar creation 2 summers ago. But who knows? No one ever gets fired from those jobs. I mean, they'll move on. People at the Fed will move over to the Treasury. People at the Treasury move over to the Fed, or they move to the government, or take some sweet gig with CNBC or some financial paper or something. So, all right. Well, that's everything I had for today. Sorry, mostly bad news, but there's not a lot of good news out there. Unfortunately, when I think there's going to be good news is typically when the world's falling apart and the market's at the bottom, I'll be like, hey, everything's great. Let's go ahead and jump back in and make a ton of money. But right now, I just don't feel real good. So, all right. Well, if anyone needs anything from me, don't hesitate to reach out. Go to dsafinancialgroup.com. All my contact information is there if you need to reach me. I'll be back tomorrow with Wednesday's Liberty Call. So I hope everyone has a fantastic evening. Bye, folks.